All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. A interesting day in the market, to say the least. A rather historic day, a day that many of us will not forget, and one that, there's no bottoming sign in sight here with today's price action. In fact, quite the opposite. I do think if we are going to see some sort of bottoming, we do need to see the market close near its lows, not have one of these little end-of-day relief rallies again. But yeah, it's a bloodbath out there. There are not a lot of places for safety, and yeah, not much to go off of other than some of the fear panic. When you're dealing with daily, weekly type of charts, and then plenty of nice day trading opportunities, for the day traders. And so let's go take a look at it. I know I'm on a little early. This video will be posted by the normal video time, but there are no new signals for the challenge here. We do have some crossovers, but one of the things have to keep in mind is the challenge algorithm is built for normal market conditions, normal ebbs and flows. And when we have something historic happen, it's going to create some sort of reset here with it, and that's what we are seeing. And it's just one where I can't expect signals to come in all that much, and even as they do, I'm very skeptical of them simply for the option pricing. The option pricing is terrible out there. It's absolutely atrocious out there, and so the risk reward just doesn't lie into the challenge parameters. The challenge and the challenge algorithm is meant to keep us out of historic drops like this, and in some safety during these times. It's not meant to predict which way the market's going to go the next day and all that kind of stuff. So we'll stay in cash until it's signaled or the time is right to jump out of cash. But for now, we continue to see steep losses, steep selling, and more importantly, overly inflated option prices. I still will buy some market calls if and when we see a bullish market vibe signal come in. But so far, we're not seeing a bullish market vibe signal, anything but. In fact, if we look at some of the market internals, market metrics, here's the number of stocks hitting new highs versus new lows. We have more than 1,400 stocks hitting new lows versus new highs today, which is an interesting number on a number of counts. It's the worst that we've seen in well over a year. You'll notice some of the selling that we saw on the trade war between the U.S. and China. We didn't see a lot of stocks setting new lows at that time. If we come back to a longer term chart, and let's just come in here to 10 years and take a look at this. This is the lowest number that we have seen since the end of 2015 or August of 2015 and beginning of 2016. This is a very, very deep drop here in number of stocks hitting new lows. And a lot of times when we see this, we do not see V-shaped rebounds. We talked about, the nature of rebounds last week, and yep, there could be a V-shaped rebound, but that is not the natural tendency after this steep of a drop. And this is a drop where if we compare the current drop to the Ebola outbreak in 2014, we're looking at significantly greater erosion in many of the market metrics than we even saw back at that time here. The bullish percent index is coming down towards a 10-year low, came down here at the beginning of last year, but very, very low here. And, there's a lot of historics being mentioned out there. You don't have to go too far in all the, stock world stuff to see, hey, first time in 12 years, first time in 22 years, first time in 5 years. When you start hearing those types of things, it's not something that tends to get erased really quickly, and not something where we tend to see normal market conditions come back right away. And so I'm not expecting that here. But we get a market vibe reversal. I will look to play it for the challenge. And then we'll look to play any challenge signal that comes in, given the fact that, or given the option pricing is in line with what we want to see with the challenge. But we don't have any of that here today, as the VIX itself is hitting levels that we have not seen since 2008, 2009, with the financial crisis. All right. Why do quality stocks get sold? This is something that when we see the market go through turmoil, we can see some names out there that are high quality, that are names that you go, this isn't really being affected by what's going on out there in the market right now. So why is this stock getting sold? So I'm going to use Netflix, for example. And you know where I stand on Netflix. I'm very bullish overall on Netflix. Netflix has had a little bit of pullback here today. I've not been able to buy it aggressively yet or anything like that. I do think the upside on Netflix is so great that I just don't need to pick a bottom or have to be too worried about that. But why would a stock like Netflix get sold? Even though it's held up pretty well through all the coronavirus stuff, even though it's a stock that you say, well, fewer people going to Disneyland, fewer people going traveling, more people buying Netflix and sitting at home binge watching, right? It should be a benefit for Netflix, not a negative, with everything that's going on out there. Well, quality stocks get sold for a number of reasons. One is that, hey, you're a fund manager. You've heard me say this before, but you're a fund manager. You have all these stocks out there, and your risk manager comes knocking at your door and says, hey, you have to cut. Given what conditions are, you have to cut your exposure down. So you don't really have a choice. Market conditions turn, so you have to cut some of your exposure. And yeah, you're going to cut it in the places that you don't like first, but if you have to keep cutting, you're going to have to cut in some of your favorite spots. So it's not like they're out there selling because now they don't like Netflix. They're going to cut because, hey, the risk parameters in the general market have changed. And that's one of the big reasons why we see quality stocks get sold. And it's one of the big reasons that when we have strong pullbacks like what we see today, or what we have seen over the last several weeks, that some of the top outperforming stocks during the pullback oftentimes are the last ones to fall, but they end up going down because eventually they have the risk dynamics just change. They have to sell some and move on, and that does put some sell pressure on these stocks. Another reason why quality stocks get sold is the fact that they're not selling because of the merits of an individual stock. They're not looking and saying, well, I'm going to sell Netflix today because Netflix now, the earnings have changed, the revenues have changed, the margins are shifting, this and that, and for any real fundamental reason. Why are they selling? They're selling because of panic. And panic is real in the market. Panic is real on both sides of the market. And panic exists out there to a great degree right now. And many times quality stocks will get taken out over panic. Visa is falling, and it's falling sharply. Is there a good reason for it? Well, yeah, there is. I mean, you're sitting here with a stock that's based on people swiping their cards. Are as many people out there swiping their cards right now with fewer trips to Disneyland, fewer flights, and all of that? No, it just we're seeing a downtick in it. So it makes some sense to see some selling in it. Will it pop back up as normal activity gets back to, as human activity gets back to normal? Yeah, it will. But it's one of those where it can be the most quality stock in the world. We can know that, yes, it will bounce back, but it will not be immune to selling. But perhaps the biggest reason that quality stocks get sold comes down to margin calls. And you think about a market like what we've been in a market that broke highs here in November, despite some of the China-U.S. trade war, and continued on higher. Started off the year going on up. And you think about where fund managers sit. Can they go to their investors and say, "Yeah, I've been lagging the market because I'm worried about some of the, some of the free fall that may exist going forward with some of the valuations that are out there"? No. Investors got to the point where they don't want to hear about valuations. They don't want to hear about any of the normal metrics that would say, "Hey, stocks are expensive," because it didn't matter. For 3-4 years, those things hadn't mattered. Will they eventually matter? Yeah, they will. But so fund managers were forced to chase, forced in. When they're forced, oftentimes they're playing catch-up. How do you play catch-up in the market? You dip into margin. Now, I know when I say the word margin, most people's reaction is a negative one, but I'm not putting any judgment on it. There are proper uses for margin. I've used margin many, many times in my career, and I will use it many times again. But like anything, it's not necessarily good or bad. Not good or evil. It is what it is. How you use it can have different consequences. And so fund managers are forced into positions when a market is such that it was last year and in the beginning of this year, where they're forced into a little bit more margin than what they might be comfortable with. And when the market gaps down big, when the market gets halted, when you see activity like we've seen today, what's happening to the margin? They're now starting to take deep losses. They start getting what's called a margin call. They get told, "Look, you've got to put funds into your account or we're going to sell what you have because we have to free up the cash to pay that loan, because margin is essentially a loan." Yeah, you can buy twice as many shares, but those shares start to tank. The person or business that gave you that margin or broker that gave you that margin, they're not willing to take a loss. So they're going to issue you a margin call, and they're going to say, "Look, you either put more cash into your account to cover this, or we're going to sell the positions you have so that you can cover the margin that you're losing here." And so it forces selling. We're seeing a lot of margin calls in energy today. It's one where, oil, can it bounce? It sure can, but does it bounce when there are margin calls to this great degree? No. And so a lot of things are dealing with margin calls right now, and that can oftentimes be a 3, 4, 5-day process when it comes to these margin calls. And it's one of the reasons I don't think the bottoms are in for a lot of different stocks. But you look at something like a JP Morgan, and there's a fundamental shift that's happened out there with the yields. And it's a negative impact for JP Morgan. But some of this is margin call here as well, as if you were to look at stocks that had a low probability of dropping 40%, JP Morgan would be on that list. If in November and December you had to make a list of saying stocks that could weather some sort of financial storm, JP Morgan would be high on that list. And it was for many fund managers, because they looked and they said, the Fed approved it. The Fed has said they can pay dividends. The Fed has said they can buy back shares. They have a huge stock buyback. Their valuations are really good, right? Fundamentally, things were pretty strong here. So an area where fund managers could go in, margin up with a little bit more comfort. Well, then you get this shift. You get this tanking action. And it's not that today is just the day of margin calls. There have been margin calls on the way down that help it to underperform. And this is one of the reasons that quality stocks get sold. So, three reasons that, are oftentimes overlooked, in terms of risk management, margin call, and, just the sheer panic that exists out there in the market. But it's what drives these things lower, and it's one of those things that creates opportunity with them. JP Morgan is selling off. Yep. It has every reason to. It's understandable. We can look at it in a variety of ways. Will JP Morgan at some point in the future hit a new high? Yes, it will. Yes, it will. Doesn't mean it's not going to 70 first. Doesn't mean it's not going to 60 first. Those are legit possibilities. But ultimately, will it move to a new high? Yes. Doesn't necessarily feel good. JP Morgan, you could buy it during the financial crisis at $20 and say, yeah, it's going to a new high eventually. Dips all the way down to 12. You're not feeling too great about it. But 4 or 5 years later, boom, new highs. There you are. They're in play. But right now, there are structural factors that are driving even quality stocks lower, and that is something that we don't see very often, but we have seen happen many times in the market, and it's simply happening right now. Will it create opportunity for buyers going forward? It sure will. But you don't have to figure out and go, well, where's the bottom? Where's the bottom? Where's the bottom? Right? Just take a look at all these. Take a look at all these candle shadows here. Where was the bottom? Where was the bottom? Where is it? That can be a fool's errand from time to time, and occasionally we'll see something very obvious that is bottoming. But so far, we have not seen that here with many of the quality stocks that are out there. Okay. All right. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you tomorrow. Take care.